We're in Grand Central Station. Have a look around. This is Grand Central Station. It's Christmas time. It's just absolutely fantastic. You can always bump into people at Grand Central because there's all kinds of people at Grand Central all the time. Oh, here's someone I know right now. Warren.
Oh my God, Sean, how are you, man?
What are you doing here?
I work in this area.
Oh, that's right. You work in this building.
Right over. Yeah, exactly.
Absolutely.
Oh my God.
Well, Warren from from Sparring Capital. I take it the firm's name is eponymous.
Of course, a play on my name.
A play
Absolutely.
on your name. Absolutely. You guys help startups get funded.
Absolutely.
Can you take us to our
Sure. You want to come
your
around?
office? Absolutely.
Yeah, great. Let's go.
They're later stage startups generally by the time you come across them. Is that right?
Well, I would say we do the whole spectrum, from a few million of revenue to tens of millions of revenue.
Yeah.
Absolutely. That's what we do. We help them raise capital. In some cases, they get such a great price from an acquirer or a strategic, we will sell those companies. So it's both M&A and financing.
Okay. And so at what sort of financing levels would you be participating? Would this be Series A rounds?
We do Series A's for our clients, absolutely.
Yeah.
And we also do, the last round before they go public. So we will do, we work with them as their banker.
Yeah.
And if they're looking at different corporate finance needs or issues,
yeah,
we will help them soup to nuts.
Can you give an example of the kinds of companies you've been involved with before?
We just closed a financing for a company last month. And it was a company where
How much did they raise?
$6 million.
$6 million raise.
It was the Series A.
Yeah.
They had raised no outside money before. It had been self-financed by the founder.
Yeah.
And he finally decided, it's ready for the next stage of development.
Yeah.
And we helped him to put together all the material. A bit of a play on sparring. We helped our client get ready for the next round.
Yeah.
In this case, his first round.
Yeah.
And we were his banker on his Series A.
Is that a usual case, or
Well, I would say, unfortunately, there is no usual case. It is, what is usual is we only work with tech companies.
Yeah.
So companies that either have software or internet services, those are the sort of companies we help.
Yeah.
And I would say in all cases they have products. In many cases they have revenue of a few million, or in some cases even tens of millions.
Yeah. So here we are on the 24th floor, where your
offices are. Yes,
great.
Absolutely.
You also do M&As.
Yeah, absolutely. Well, in some cases, people will say, gee, at one price, I'll take money and try to take the company to the next stage. Another price, if someone's going to wire in that much money in 45 days or 30 days, gee, that's something that the individual have to think about. And of course, if there's angel shareholders or a Series A before, they go, wow, that price, absolutely.
Yeah, they'd sell.
They'd sell. And obviously, the more information they have, the better informed decision the entrepreneur and the board can make.
Yeah, absolutely. So this is your office, and this is some of your deal teams, I guess?
Yeah, so obviously what we do, we help companies raise money.
Yeah.
And on Wall Street, as you know, there's a history of doing tombstones or commemorative items.
Yeah.
This is just an example of a couple of deals we've done over the past few years.
And this is some of the people that work on your
team? This is some of the members of the team. We've all been together 14 years, 16 years. I mean, just a long period of time.
Wow. Would there be a sweet spot for where you want to be involved in? $50 million market cap, $100 million market cap?
Yeah, I would say it's probably up to a couple $100 million. So I think once it gets to a certain size, at that stage of the financing, they're thinking of going public. So I'd say once they start thinking about, or once they can do it, then you may want to go to someone who does sales and trading. We don't do sales and trading. So we don't sell or trade securities that are publicly listed. We only deal in private securities. So helping, in this case, obviously, helping a private company raise money from a venture, growth equity, or PE firm, or even from a strategic investor. So we've done a number of deals where we've helped companies raise money from a corporation, and we do a lot of those.
And the companies that you're dealing with, the amount of financing they're typically looking for, you mentioned a couple of deals, the sort of the $6 or $10 million range.
One of the tombstones was a $100 million transaction.
Yeah.
So yeah, absolutely, it depends upon.
And would you be responsible from the company's point of view for raising the entire?
Yes.
Yeah.
Yeah.
So,
and once again, it doesn't come from individuals, it comes from institutions.
yeah,
So it could come from one institution,
yeah,
or maybe it would be 2 or 3, and we really become their partners.
yeah,
And we work with our client figuring out, well, it's not just money, but what can they bring, and they may or may not sit on a board, but what's the value of them besides money? Are they going to help you expand the product line? Are they going to help you geographically? Are they going to help you think about the M&A or strategic roadmap from a development perspective?
Right.
So there's a lot of different attributes that VCs, growth equity firms, or private equity firms can bring.
Yeah.
And we help our clients sort of think about all the different attributes or features that a board member in a firm can bring besides just money, and besides just valuation.
Right.
What are they going to really do to help you build your business?
Yeah,
That's just so critical.
Yeah. And your services that you're providing, I mean, as a matchmaker for this, you obviously need to, I mean, you're not managing your own funds, you're providing the services for others to place funds. So is there like how are the placement fees,
Great question. Just like a Morgan Stanley or a Goldman Sachs, they charge retainer fees.
Yeah.
In many cases, success fees in all cases.
Yeah.
So it'll be a combination of those two that determine what you charge. In some cases, you may also get warrants, would be part of the success fee component.
Yeah.
And I think the key thing for us is really figuring out who's a client where we want to work with them, they want to work with us. It's a logical fit.
Yeah.
And if it's a $100 million transaction, we're going to charge a lower percentage than if it's a $10 million transaction. Because our time is worth X amount of money, and we want to make sure that there's the right balance between the services we're providing and what we're doing for the company.
Right, right. I imagine that you'd be looking to have the fees in the order of $500,000 at a minimum sort of thing, or
I would say that would not be uncommon.
Yeah.
Absolutely.
And so that indicates for people that are raising more money, it's more, it's more well, it may be the best way for them to raise the funds for sure.
Right, and also if they're very focused on raising a fund, they don't want to worry about maybe going public 3 years from now. They don't want to really worry about selling the company now. They're usually very focused on what they want to do. Because if you think about management teams, hopefully management teams are spending 24/7 on building their business.
Yeah.
And going up to Boston, New York, the Valley, maybe down to Texas, maybe into London. Firms all do different things. They all have different areas of expertise. They all invest in different stages of companies.
Yeah.
They all have size ranges they'd like to invest. So all these firms are very different, and obviously having been in the finance industry for 40 years, but specifically worrying about technology for almost 20 years now, you really get to know the firms, know the partners and the individuals, and where their strengths are, and also where they're not as strong as maybe other firms may be.
Yeah.
What we try to do for our client, and hopefully all bankers do this, is just help it be a smoother, more efficient process where they can still spend 24/7 building their business, still worry about their team, worry about the competitive environment, worry about their customers, and we'll just make this a very smooth and easy process as to who would be the right party to achieve their objective.
And bankers aren't just being used for IPOs.
Absolutely correct. Having someone to sort of be your Sherpa or your guide to help you maximize the time and have you hopefully have a higher probability of a positive outcome, i.e. a term sheet.
Right.
You
have the benefit of the 10,000 hours of expertise.
That's right.
And you know exactly how to optimize a deal for the founders. For the people that are looking at the universe, I mean, we have startups. We have 600 startups that SOSV is invested in. And those are everyone looking for $300,000.
Right.
From family and friends to later stage Series A. Not that late stage, obviously that's early stage still. Where I see a lot of banker work in the past has been sort of at the Series B, Series C sort of larger rounds. Can you put that in context for me as to where you guys fit in?
I think we're a little less focused, or a lot less focused on the nomenclature of the financing.
Yes.
Is it a A, B, or C?
Yes.
We're much more focused on the company.
Yes.
And does the company already have a product that's out in the marketplace?
Yes.
Do they already have referenceable customers?
Yes.
Is there enough of an infrastructure so they have a roadmap from a product development, from a growth development as to where they're going to go? And many times that's a function of the amount of revenue.
There's loads of startups out there. how many deals are you getting financed a year?
I'd say it's a half a dozen to probably a dozen, focused on certain categories: internet services,
Yeah.
online travel, enterprise software,
Yeah.
and obviously a lot of compliance, security-related software, ERP-related software.
Yeah.
Obviously, a company using a business model for subscription
Yeah.
is better than licensed software.
Yeah.
So there's a lot of components or characteristics underneath that cover,
Yeah.
which really help you determine the degree of difficulty.
Yeah.
And therefore, if your degree of difficulty is going to be a little less because it's a repeat entrepreneur,
Yeah.
he's going back in the same category.
Yeah.
He already gotten a couple of corporate clients that are referenceable.
Yeah.
He's doing things on a subscription basis.
Yeah.
It's a large TAM, large total addressable market.
Right.
So you have a lot of these characteristics. Wow, that's going to be a fun client. That's going to be a client where it'll be a lot of fun to work with them. And we have a high probability of being very, very successful because it'll be very efficient.
One last piece of advice to founder teams as they look, say, even towards an acquisition. What would you say, the founding team should be looking for when they're entering that stage?
I think you're able to make the best decision when you have multiple options on the table.
Yeah.
And just because someone may put their arm around you and say, oh, we're going to be a great partner, a great steward of the business and the people, it may not be the best financial outcome. And everyone can buy you a great dinner, everyone can tell you you're going to be a great strategic fit. But in reality, you've been building your business for a period of time, you have a loyal team that's helped you. Hopefully everyone's going to benefit at some point if there is an exit, an acquisition.
Yeah.
And you want to really think about, well, who's going to wire in that largest amount of money
Yeah.
with the highest confidence to close. And you want to create a little bit of a food fight
Yep.
and sort of step away from it and have someone who's going to be a little bit the bad guy or the conductor leader to really sort of maximize the outcome, because not only do you have
And
yourself...
that's what the banker really steps
That's
in.
what the banker really does. And keep in mind, first offer is never a final offer. And then even final offer is never really the last and final offer. So you want to try to maximize the outcome without breaking the cookie jar, so to speak.
Yeah.
From several different parties.
Breaking the cookie jar meaning pissing off your,
Yes.
your future bosses.
Yeah, but even if that happens, remember, it's never the company that does it, or the company's management.
Yeah.
It's either the board
Yeah.
or the banker.
Yeah.
So you still got two other parties that management can throw under the bus. Because at the end of the day, your responsibility is to maximize wire transfer in with the highest confidence to close. And if you can get on that efficient frontier,
Yeah.
you're going to make the best informed decision.
Well, and it is one of those situations where it's the first time, in most cases, it's the first time and maybe the only time in a founder's life that they ever do this transaction. The acquirer may be doing 20 of these deals a year or
Right,
5
absolutely.
or 10 deals. It is a deal that is weighted against the founding team. Having someone on the founding team side that's been through it before is certainly a help.
Right, and we, my previous career on Wall Street did, hundreds, if not probably 1,000 transactions plus. Obviously, Sparring Partners have done well over 100 transactions.
Yeah.
So obviously, we just have a lot of experience in this category.
Yeah.
We, in this sector, we're just very, very focused.
Yeah. Well, it's terrific. Thank you very much for taking the time.
Great
along.
bumping into you. Great
Yeah,
seeing you, Sean.
absolutely. Great to bump into you.